Hi everybody. I thought I'll do a video recording instead of a live stream because my travel schedules are just insane. But I wanted to catch up with everybody. I apologize. Just last few days is just non-stop traveling from one city to another, flying, airplanes, everything, right? But I thought it's probably opportune right now to take stock of what's happening across the world, and from here get a few data points and predict what I think will happen to the second half of 2023. Okay, so in short, I'm crystal balling to see what can happen from now to the end of 2023. So it's probably about a 6-month prediction. Okay, now predictions are predictions, right? Sometimes we're right, sometimes we're wrong, but I think there is a strong likelihood that some of these things might happen. So in my prediction today, I will talk about what my base case is. I'll talk about the possible upsides, and I'll also talk about possible downsides. Okay, and then we make an assessment what can happen, shall we? All right, let's start. So this is my base case. My base case for 2023 second half. Let's start with the US. Okay, I think the US is where we are now more concerned about stock market. There are a few things that can happen, and I think the most important thing we need to predict is now the inflation rate. The US inflation rate, to my analysis and to my prediction, will fall continuously all the way to the end of the year. And that's largely because the lag indicators such as housing data, particularly the rents and housing prices, will start to catch up. So we have been looking at backward looking data, but right now we look at the forward looking data. All the current data right now are showing that the housing prices and rentals start to come down. So all this will eventually catch up. So it has been lagging for many months. Okay, so I think as this data start coming in, the US inflation will fall even more. So I think that the US inflation rate will continue to fall from its current 4% to maybe 3.5%, maybe to 3%. But somewhere around there, it might start to slow down a little bit. Okay, but eventually it will come down to the 2% that the Federal Reserve wants. It may not be achieved this year, but surely will come down. The Federal Reserve, in its hawkishness and a bit kiasu, may still push for 2 more rate hikes. So in July, if the inflation rate don't come down fast enough, they may call for another 0.25% rate hike, which I personally think there's a 50% chance they'll do it. Okay, and then they will watch again. So somewhere they probably pause in August, and then September, October, they'll see whether they need to do it again. But I think 2 rate hikes is the max they will do. Okay? So if this is all within the prediction and market accepted and predicted already, then the impact to the stock market on the downside will not be high. So in this case, I personally predict that the S&P 500 will rise continuously, passing the 4,500 mark, and maybe even passing the 4,600 and 4,700 mark by the end of the year. Will it cross 4,800, which is the all-time high that we previously achieved? It's hard to say. That will require more than inflation rate coming down. So we'll talk about that from other upsides. But I think somewhere between 4,500 to 4,700 is something I do predict will happen by the end of the year. Okay, and that's largely driven by both a fall in inflation rate. Okay, and no more than a two more times of 25 basis points rate hike. There will be some upsides that come from an AI boom, and we'll talk about that later. So the other very interesting development that we're all happening right now is the Ukraine-Russian war that's going on. The Ukrainians have launched a counteroffensive, heavily trained by the West, heavily equipped by the West in terms of weapons and ammunition. the Russians are gradually losing ground, but they're not losing big grounds. They're losing grounds bit by bit, hundreds of meters, kilometers, and things like that. And Ukraine is a big country, right? So the Ukrainians are now breaking through lines of defense after lines of defense. The Russians have established 3 lines of defense. They broke through the first line of defense, then they got a second line of defense to go, and then a third line of defense to go. The war is going to take painfully, on the Ukrainians. The Russians is going to suffer as well. I don't think both sides going to have both sides are going to give up so easily. So this war is going to be likely going to be very slow, almost like taking inch by inch kind of feeling, right? Then winter will come, okay? If they don't finish the war by November, then winter will come, and then December the war will stop again, because nobody like to fight during winter. So it is unlikely to have great progress. I personally wish that the Ukrainians will win and win big time. Until the F-16 comes in, which a lot of countries have pledged F-16, where then the Russians will have the Ukrainians will have air supremacy. The war is likely going to go slow and slow and slow. The Ukrainians, in my opinion, maybe also in my hope, will likely to win, but it's a slow win. It's not like a big win, right? Unless some special weapons are deployed and things like that. So with that said, I think from a perspective of the war, it's something what everybody predicts anyway. So if it happens this way, I don't think there'll be a big impact on the stock market. I don't think there's a big impact on the world economy. So and these are where the upside and downside comes in. When we have this is my base case. The base case for the Ukrainian-Russian war is a slow progress of the Ukrainians gradually pushing the Russian back. Very slow, very gradual. That's what we can see right now. So this is my base case for the Ukrainian-Russian war. The other interesting base case is that China economy, since they liberalized the country from COVID lockdown, the growth will not materialize. They have hoped that once they open up the economy, the growth will start taking off. It's quite clear to me and clear to many economists right now it will not happen. A few months ago, when I first mooted this idea that China is in economic trouble, a lot of people were laughing at me. And remember the news then, they were talking about the yuan will replace the US dollar, the US dollar will start losing its dominance. Rubbish. I already said that time is rubbish. So many people don't believe me, right? Look at it right now. The yuan is continuing to fall, okay? The yuan continues to fall against the US dollar, and the US dollar is still as strong, okay? Nothing has changed, nothing will change. So, I ask you right now, would you hold the Chinese yuan will you hold a Chinese yuan in exchange for US dollar? Nobody dare do that, man. Everybody worrying when the US dollar, the Chinese yuan will collapse. So it's unlikely to collapse because it's a restricted currency, very difficult to trade. But seriously speaking, no chance. So basically, the China economy is unlikely to take off, and all these have implications throughout the rest of the world, because many countries depend on China for exports, for trade and things like that. So the base case that I have for the second half of 2023 is that China economic recovery won't happen, or happen in a very small way. So I don't think that we will see an upside. I don't think we'll see any upside from the economic recovery that everybody hoped for. Okay. Now, with this few data points, I also like to predict that the Singapore economy will go into a recession. I think Singapore will go into a mild recession, but still it will be a recession. We've already got 1 quarter of negative growth. I'm predicting now we've got a second quarter of negative growth. Already in April and May, we see the trade going down already. If June also go down, then we're gonna have a, in a big way, then we're gonna have a recession. So my base case is that Singapore will go into a recession. Knowing our Singapore government, which is a very kanchong government, very likely they will quickly swing into a rescue plan. For one simple reason, the presidential election is coming. They don't want the presidential election to be disturbed by news of a recession, and the Singapore government do anything. Then the people might take it up with possibly an opposition, not opposition, with a candidate that is not favored by the ruling party, right? So anyway, but the government, even in the normal case, the government will come out and really rescue everybody, with a lot of rescue plans and things like that. That's how our powerful government is. It's very good, very kind, all out to take care of people. Personally, sometimes I hope that 给人民吃一点苦头 is not a bad thing, right? So let the people take some hardship is not necessarily a bad thing. If not, everybody is feeling so entitled. Everybody feel that the government taking care of your people. I have nothing to fear. We have got reserve. We have got good government. We have nothing to fear. Right? So that kind of attitude is actually a very dangerous attitude, because our country is very small, and things can go wrong and can go wrong quickly and suddenly. So I don't think we should have the attitude that we are invincible, we are rich, we are without any risk, which is a lot of Singaporeans, especially younger ones, feel this way. Yeah. So anyway, but I do hope that the recession, if it ever comes, will cause the government to rethink twice about raising the GST to 9%. Right now it's 8%. Next year is earmarked to go up to 9%. I hope that if the recession hits, the government will postpone the GST hike by a year or two. That will alleviate some pain to people. I also hope that, and maybe even hope that, that the property market will soften. It's really overheated, and the rental markets will soften as well. So I think, combining all this, I think a bit of a recession may not be that bad for the Singapore economy, okay? But everybody should conserve some cash just to be sure, okay? Now that we have talked about the base case, let's talk about the downside, shall we? The downside. What downside can happen? I think the biggest downside that can happen is a re-spike in the inflation. The inflation takes off again. If the inflation in the US takes off again, then that would be the most lethal and most painful blow that can happen to the stock market. Stock market will crash again. So because this will force the Federal Reserve to react with a tough measure, maybe half a percent point increase, maybe even a 75% point. Can it happen? If I look at 1982, the fall in inflation goes like that. So it can happen, and that will send frights to everybody and things like, including myself, right? So can it happen? Looking at the signals, I don't think so, but it's really hard to say because we're predicting 6 months ahead. I think a lot of people kind of really accepted that the inflation, that people got used to the inflation, and that's going to be a very bad thing if they got used to inflation. But let's hope that the inflation won't spike again, okay? So we'll watch this very closely. The second big thing that can happen, in my opinion, is Ukraine win a decisive battle in the war against Russia, and Russia in its extreme measure launch nuclear attacks. That will be very bad for the world stability and economy, because there's going to be a lot of repercussions. If they launch nuclear strikes, most likely, first of all, would be then the second time in world history nukes are used. Then the West will definitely react by supplying Ukraine with nuclear weapons, and nuclear weapons will be fired at Russia, and Russia may then say that the West have supplied them with nuclear weapon, and then we have World War III kind of thing. So let's hope that kind of scenario won't happen. But this would represent the worst outcome. So Ukraine winning the war may not necessarily be a good thing, depending whether we have Asiao in Russia, reacting in a very painful way, right? So that's the other downside I'm more worried about. Okay, I don't think anything will happen to China and US. The US the US secretary is now visiting in US. They have great talk. I don't know what's the outcome. I'm still watching, but it seems talking is always progress is always good. But unfortunately, I think the downside could happen is China actually going into a recession. China crash further, right, economically, and now they can crash, and if they don't announce it, in that sense, nobody knows, right? But they can crash and announce it, that their official figure actually shows that China economy is crashing big time. Then the yuan would fall even more. Countries like Singapore, who is heavily dependent on China and Hong Kong for our exports and things like that, will suffer, even more, and our economy will go into tailspin. That kind of scenario, our property market will sure to crash. Okay, then that will be that'll be quite a serious thing. Okay, I don't know whether that will have an impact on the U.S. stock market, but that will happen. If that happens, that will have a serious impact on our economy. And with that, the other downside that happen is that already many economic blocks right now are in recession. We have New Zealand in recession. We have got Germany in recession, EU in recession. Now, if globally more and more countries go in recession, including the US, in a big and mega way, then we will have some impact. So I don't think that the US will go into recession. I think that the rest of the world has a high chance of going into recession. Okay. The next thing that could happen in a big way, in a big negative way, is many commercial real estate in US actually go down under. So you see in the US market, the commercial real estate, many of them have a bullet payment. So you borrow money for 1 or 2 years, and then you have to pay in full. And many of these bullet payments are coming now. So they used to be on maybe 1 or 2% or near 0% interest rate. Right now you jump to 5, 6, 7, 8%. They will die, man. You will die. So actually, this is going to be a possible bubble burst of the commercial real estate. Many financial analysts are looking into this right now. So we should watch this area. What I fear is not the commercial real estate bubble burst, but the banks get hit together. Then we have another banking failure like what we saw in early this year with Silicon Valley Bank and First Republic and all this. And this would have shades of similarity with 2008 financial crisis. I would just say that I've always said that I won't sell the S&P 500 and NASDAQ or things like that. But when there's a bank failure, I will sell. I will bail out, okay? Because bank failures are very, very serious. So this year, I was watching very carefully, was already waiting to bail out if there are more bank failures. So right now, I don't see this risk. But if it does happen, then this will represent a bailout situation for me, okay? So last, we want to talk about some upsides. The world is not doom and gloomy. In fact, I'm more optimistic than pessimistic. So what is the possible upsides that can happen, right? So first of all, the AI, artificial intelligence boom will take off in a big and mega way, right? So this is something that is already happening right now and will happen in a big way. So companies like Nvidia, all the FANG stocks and all these are all going up in a big mega way. I think we are just seeing the infancy of it. I think there's enough room for a two-year rise for AI. By the end of 2 years, it will be a bubble, right? Let's say the S&P 500 shoots up to 7,000, 8,000 points. Then there will be a bubble there, and then we have to decide what to do in those bubble situations. But for now, the swing just started. There's no bubble yet. Okay, so it will take off in a big way. I do think it happen. If it takes off in a big way, I think crossing 4,800 points by end of the year is a very high possibility. So I do think that there is a impetus for the AI boom to happen in a big way. Okay, the second possible upside is that the U.S. inflation actually dies off totally as the updated housing data comes in. Okay, and it brings the inflation down almost to a 2% and even lower, even to a negative. That is most likely in the kind of situation the US actually is possibly in a recession. Now, that kind of recession may not necessarily be a bad thing because it cools down the economy. The Federal Reserve cuts interest rates by the end of this year in order to stimulate the economy. And when they cut the interest rate, the bond prices and the stock prices will all shoot up. That is a very possible upside that can happen. So don't think of recession necessarily in a bad way. Okay. More importantly, what the Federal Reserve aims to do. Last one is if the Ukrainian counteroffensive wins a big way, and the Russian army collapse, without nukes being used, without nuclear weapons being used, the Russian army collapse and they got chased back and things like that. That will be a huge upside as well. The world will celebrate, and I think there'll be a very positive impact to the world economy as certain ports are open, airlines are. Food supply that has been disrupted will now be resumed. All this, so I think by near winter we should see an answer to this question, right? So anyway, so just to sum up, okay, we have a base case where I think the S&P 500 will gravitate towards 4,005 to 4,007, okay, and that could be driven by a upside to about 4,008 and beyond if the AI boom takes it up in a big way. There are a couple of downsides that we should not be blind to, especially the downside of a possible contagion effect to the banks if the commercial property prices were to collapse in a big way. So I think if we watch this situation and all these signals coming up, we should know how to handle the stock market and beyond. Okay, all right. I can't take your questions like a live stream, but do drop those questions and comments in the comments below. Do share, okay? Do share and like this video. I hope more people will see it. In all case, I look forward to interacting with you again. Okay, I've got to rush for my plane right now. I'll see you again.